All right, good evening, everybody. Good day, everybody. Now, I want to quickly, one of the most powerful strategies that have made me a stupendous amount of profit in the market is what I'm about to share with you. Now, right now, we're going deeper. We're going deeper into becoming a profitable trader in the financial market. So, I'd like you to pay a very strong attention to what I'm about to share with you. And because this will change your finances forever. Now, one of my most powerful strategies, which I've taught my students all over and again and again and again, and they have been able to make so much profit from the financial market, is what I'm sharing with you tonight. Now, there is this. If you check my screen, let me quickly take you back to a few slides, a few slide, a few slide backwards. Okay. Now here, when you're talking about the direction of peaks and trough that defines the trend of the market, but how do you know that the trend has actually changed into as reversed? Now let me just continue from here. When the market experiences two peaks and two troughs that are successfully higher than each other, then the market is said to be in an uptrend. So two peaks, that means that, I usually represent peak with the capital P and troughs with the capital T. So they have two peaks, that means P1 and P2, and then two troughs, T1 and T2. When they are successfully higher than each other, then a bullish trend has just started. I need to know, because the most beautiful strategy, or the most beautiful way of making profit in the market, is when you join the trend at the very beginning. So I'm always in search for the beginning of a trend in the market. Where is this trend beginning? For example, if I'm selling and I'm making profit, I'm selling and I'm making profit, I'm selling and I'm making profit, and the market begins to buy, when am I so sure? At what point in the market am I so certain that the market has changed direction from bearish market to a bullish market? Now, this theory by Charles Doe and his colleagues says that when I'm able to identify two peaks and two troughs that are successfully higher than each other, that means a bullish trend has just begun. So I'm going to be switching my bias from bearish to bullish now. Then I can keep riding on that waves. Now let me show you the next slide, which is the opposite of what I just said now. And of course, the opposite is true. When a downtrend For a downtrend, when the market shows two peaks and two troughs successfully higher than each other, then the market is said to be in a downtrend. In a downtrend. So that means if I'm buying and I'm buying and I'm buying and I'm buying, and all of a sudden I see two peaks and troughs that are successfully lower than each other, it's telling me, hey, stop buying now and start selling. Stop buying now and start selling. And that's what I'm about to show you on the chart right now. So let's dive into the chart. So let's see this USD JPY. You can see from here now, the market has been buying. Market has been buying all the way from down here, has been buying all the way to this side, has been buying. Market has been going up, higher, higher, and higher, low, higher, and higher, low, just like we said before, higher, and higher, low. And then all of a sudden, I'm seeing now, anywhere we see a resistance, it is called a peak. So I'm having here now, I'm having my P1, then I'm having my T1. Look at it here now. This is 1 hour time frame. My T1, T is the trough. Then I'm having my P2. I'm having my P2. Then here now, I'll be having my T2 because it is lower than T1. This is my T2. This is my T2. So I have P1, T1, P2, T2 because it's lower than T2. Here, this theory says that from here now, from here, I can begin to sell. I can begin to sell from here. And then market moves at least some pips to the downside. You see, from here, market move, how many pips now? 138 pips. So let's say the market is selling and selling and selling and selling and selling. All of a sudden, instead of this one to close lower, it's it is closing above the previous resistance, just like I showed you in the last video. Then is closing here. It's closing here. It's not supposed to be higher than this, but now it has closed higher than this now. The moment I begin to see that now, my bias has changed from selling to buying. So therefore, how do I label it now? The last one is what I'm going to be saying now. This one now becomes my P1, my P1. Then the most recent low becomes my T2, my T2. Then this one becomes my T2, sorry, my P2, my P2. Then I have my T2 here. I have my T2 here. Now, if you're going to trade with this theory I just shared with you now, what that means is that the moment I complete my P1, T1, sorry, this one's supposed to be T1. So I have my P1, that's peak 1, trough 1, peak 2. Peak 2 must be higher than peak 1. Okay, then my T2 is here. My T2 is here. So when you see something like P1, T1, P2, T2, that theory says from here now I can begin to look for a buy. Then the market also move to a little bit to the upside. That's how many pips? That's 94 pips. And then that goes on and on. And then we have over here too now. So the market closed, but it didn't close below. This market didn't close below this T2. It still means that the market is going to the upside. This market is still going to the upside. Okay, so it's still going to the upside. The market is still bullish. It's still going to the upside. So I can keep buying. Then you can see how many pips is that now. That means if you enter from here, market actually moved to this by 240 pips. 240 pips. Even here now, it has still not closed below here. It's actually more than that. It has not closed below. You need to understand that the T2 must not be broken. Your previous support must not be broken if you are trading on, if you are going bullish. If you are going bullish, your previous one must not be broken. So as long as this one is not broken, then the market is still going to the upside. You can still see it's still forming higher high, higher low, higher high, higher low, higher high, higher low. Okay, higher high, higher low, higher high, higher low. The market is still buying higher high. Okay, higher low. It did not break this last low, so we are still on the upside until this most recent low is broken, until the low is broken here now. So when the low breaks here now, okay, we can now begin to look for a sell. And if you are counting from here now, you're supposed to count from here. You have your, this will be now my P1, then my T1, then I have my P2, then I have my T2, Then it's saying when you begin to see this now, it's telling you that the trend has actually changed to the downtrend. So from here now, I can begin to look for a sell. So if I sell the market from here now, if I sell price from here, you can see I'll be having some pips to the downside. That's 124 pips. And so you can also see again the market is going up and down. So the moment you're able to count the P1, P2, T1, T2, then if they are successfully higher than each other, you begin to buy P1, T1, then P2, T2. Okay, so when they are higher than each other is a bullish market, when they're lower than each other is a bearish market. And so this is, I use this a lot on maybe 1 hour time frame. 1 hour time frame, and it can fetch you a lot of money. So I need you to go through it on your chart and see how that can be, how you can master it to make profit. And let me also show something on deriv, on volatility 100, volatility 100. You can see that the price was actually rallying up from here. Okay, you can see it's still buying, price was still buying. So let me see how when we start to change. Okay, you can see here now this market is ranging. This is a ranging market, like I was explaining to you the other time, when the market is moving between a fixed resistance. So as the market get to this resistance zone, it is coming down, then it get to the resistance zone again, it comes to touch the support, then up again until it breaks the range, the price range. And here now it's forming higher highs and higher lows. So market started forming, higher high, then it forms, then it impressive movement, retracement, forms impressive movement, then it's giving us retracement, then it's giving us impressive movement, that is on long, then it's giving us retracement, and here now, within here now, we have a little ranging, we have a little price ranging. So here we have a double top, and price is still ranging here now. Okay, then we have another impressive movement, then we have the pullback, which is retracement, then we have impressive movement. Okay, then we have retracement, impressive movement, like I was sharing with you in the other video. Okay, impressive movement, impressive movement, then we have retracement, then we have impressive movement, and so on like that. Here is saying, let's assume that somebody is selling this market, and all of a sudden you can count your P1 here, P1, then we have T1, then you have your P2. Let's put it P2 here. You have your P2, then you have your T2 here. You have a T2 here. So what this means is that an uptrend has started. So what I'm trying to explain to you now is that from here now, I can begin to look for a buy. I can begin to look for a buy here onwards. I can start looking for a buy from here. And imagine I'm taking a buy here. Imagine I'm taking a buy from here now. You can see how massive the market went. Market moved massively to the upside. Massively to the upside. You see, massively to the upside. And then, so when I count and it's not complete, that means the trend still continues. You can see like that. So when the market is on a trending, when market is trending, this is applicable, but it's not applicable in a ranging market. Like from here now, market has started ranging again. So that counting of P1 and P2 is not going to work. It's not going to work in a ranging market. Look at it now, market is moving between here and here, here and here, and then it later broke it out, then returned to it again. So it will not work in a ranging market, but it always work in a trading market. So this is the first of the strategies I'm going to be sharing with you. When we say when the market has two peaks and two troughs that are successfully higher than each other, we say the market is said to be in an uptrend. Okay, and when the market has two peaks and two troughs that are successfully lower than each other, then the market is said to be in a downtrend. This is what I want to go and master now. Then I'll teach you, I will show you something deeper in the next class. Okay.